Oil prices had already edged up on Friday ahead of the US and Israel's military launch against Iran. This as market players factored in the rumblings of a possible conflict. In the end, Chief Investment Officer at Makwe Fund Managers, Makwe Masilela, says it was almost inevitable.
Seen the oil price reacting on Friday going up by over 2% because it was expected that the US might attack Iran, and what it does to the oil price going forward is that you get to affect the Strait of Hormuz that Iran probably might block. We know there's just more than 20% of the global oil supply that goes through that, so that will probably increase prices, but we are expecting OPEC later today, that is the organization which is controlling almost 40% of the global oil production, to have an emergency meeting with the intention to increase supply. Probably that will give a little bit of a buffer.
Dr. Elna Moolman, who's the South African head of macroeconomic research at Standard Bank, says while there is a possibility of elevated oil prices in the short term, the expectation is that inflation won't move too far away from the new central bank target.
Really started rising in recent weeks as financial markets started discounting a higher probability of an invasion. But should they rise to say $80 per barrel, we would still expect inflation to be within the Reserve Bank's tolerance band of the 3% target, plus or minus 1 percentage point to either side. The rand often sells off during such geopolitical disruptions. Although this time around, we do expect that there would be some support for the currency from higher gold and platinum prices.
Moolman's sentiment was echoed by Chief Economist at the Efficient Group, Davy Rood, who says that South Africa's economy is unlikely to be impacted in any significant way, but with some caveats.
Likely, the South African economy can be affected by way, for example, of relatively high oil prices, but even after the attack, the oil prices remain relatively low. So purely from an economic point of view, not much can be expected because of this conflict. Politically, it's completely a different story, of course. South Africa recently aligned themselves with the Iranians, and if there is a regime change, for example, in Iran, then South Africa clearly would find themselves on the wrong side of history. But time will tell.
Meanwhile, Masilela says the immediate beneficiaries of the uncertainty that comes with the tensions in the Middle East on global markets will include the gold price, which has been on an upward trajectory for some time, and also currencies like the Swiss franc and maybe the US dollar. Whatever happens, expect volatility to be the name of the game in the coming days. And with talk of the Strait of Hormuz being closed, there's likely to be upward pressure on oil prices in the short term. Nampimelo Ziba, SABC News, Johannesburg.